You're listening to Money Never Sleeps Radio. In your face.
What we got here is a failure to communicate.
Oh, have I got your attention now?
Greed, for lack of a better word, is good.
You know what I mean?
Money to be made in a place like this.
Money never sleeps, pal.
You're crazy. Don't run when you lose. Don't whine when it hurts.
You know what it takes to sell real estate?
It takes brass.
I've fallen, and I can't get up.
All right, welcome to Money Never Sleeps. This is a show where we talk about anything and everything that impacts the flow of money from around the corner to around the world. And today, look, we're going to be talking about one of my favorite topics, digital assets and digital asset treasuries. Been speaking to a lot of different companies across a lot of different industries in regards to digital asset treasuries. What I found is that you have a lot of people that really just don't understand what they are. So we're going to try to solve that a little bit here and potentially give some insight to what a digital asset treasury is, what it's for, and how it can help a company, and how, if you do it the right way, it can actually go and be that long-term value that it's supposed to be, right? You know, a digital asset treasury, when it basically strengthens the balance sheet of any company, because you have an appreciating asset that will accrue over time, right? And you have the potential to generate yield and compounding yield at that. You know, I think people are under the assumption, or some CEOs or CFOs that I've been speaking to, that they're under the assumption that they have a digital asset treasury. I don't care if it's Bitcoin, Ethereum, Solana, Piku, whatever it may be. They think that it's something for them to go and sell. You got to wake up there, because a digital asset treasury is a long-term value add to a company. You know, and again, I'm finding this more so with micro cap companies, that they're the ones that really don't understand it. The ones that do are executing. They're doing some great things. They're raising some big capital for what they're doing. You have some digital asset treasury. You have some companies that are adopting digital asset treasury strategies, and basically they are turning it to digital asset treasury companies. So they're turning it to DATCOs. And what happens there is that they kind of abandon their core business, and they just focus on that, the monetization and everything else, and building on top of it. Now, there's nothing wrong with that if you have the methodology and you have the ability to execute. But, you know, if a digital asset should slide down, you know, you run the risk of the company itself basically, you know, losing value because of that. You know, if you're just, I mean, because that's all you do, you're not offsetting it. You're not creating various revenue streams away from one thing. You know, you can have a number of revenue streams, yield generating streams off of a digital asset treasury. This is true, no question about it. But now let's say you have a core business and you're doing something there and you're building it up. Now you have the ability to utilize that digital asset treasury as a long-term asset for the company. Intangible or not, it doesn't matter. It's a long-term asset on the balance sheet. It has a potential to accrue in value. It has a potential to have, you know, yield. Okay, I mean, you know, typically you can be running, you know, 8 to 12% per annum on a regular, and now compound that, and you do the math, right? I think that a lot of, you know, the companies out there that have their backs against the ropes, and again, I'm dealing with this with certain companies, and they really don't get it, that at the end of the day, when you have limitations with what you can do as far as attracting investor confidence, attracting capital, having the ability to do a pipe or have some sort of debt capital, if you don't have the shekels in the tank, you're not going to get the interest from the general, you know, investment community. You may go, if you're a microcap, you run the risk of coming across some bad actors and basically, getting, your stock knocked down. You have some companies that'll go again without a digital asset treasury. They'll go and try to do a reverse stock split and try to boost up their stock there while screwing the investors. I'm not a fan of that. If you're going to do a reverse stock split, make it worth the investors time, and their money. Because if you're going to do that, you have to come out with something that is going to be a value add, and a digital asset treasury is just that. So a company that does do a reverse stock split because they want to tighten everything up and they have a digital asset treasury, that right there is a win on all different levels for the investors, for the company, and for the future of everyone involved. Look, if a company starts growing and building, what are they doing? They're having a social and economic impact. They're creating jobs. They're impacting families. They're impacting communities and the governments in those communities. It just, on my end, I just find it, kind of odd that if, as a company, if you run a company, you're the CEO of a publicly traded company, and you are not in a position that your company has the ability to climb out of a hole that you may be in, or have the ability to execute and basically, generate value and revenue and the whole 9 yards. If you can't do that, you need a solution. Okay, a digital asset treasury is that solution. It is that solution. It brings that value to a company. And once that's there, it's about execution. It's about a company executing on their core business, and let the digital asset treasury do what it's going to do. Now, the beauty of things is that you're not, when you have a digital asset treasury, you're not looking, and if you're looking to sell, then don't do it. Don't do it because you're going to shoot yourself in the foot. You're not a trader. You are running a publicly traded company, and you have a fiduciary responsibility to your shareholders to do the right thing. Having a long-term digital asset treasury is doing the right thing. It is not doing the wrong thing. It's doing the right thing. You have some great attorneys out there that are guiding companies into doing this. You have groups out there that understand this and are trying to bring things forward. Okay, look, the future of finance, I say it today, I've said it 5 years ago, I will say it in the next 5 years. It is the future of finance. Any which way you slice it and dice it, it is the future. There's no escaping that. When you have the likes of major banks like J.P. Morgan, Citibank, Deutsche, and everything else, you have brokerage firms, you have, big trillion-dollar companies like BlackRock, Blackstone, KKR, and the like, going and getting involved in this space. Do you think they're doing it because, hey, I like this, I like to see a shiny token? No, they're doing it because there's money in it. There is money in it. There's growth in it. It is a growth vehicle. If anyone is listening to the show that lived through the internet age, right, when everything was coming around, when everything was kind of opening up, they call it the boom and the bust. The reason why it was a bust, because people didn't understand it. They understand it now. You know how many people said, well, the internet, it's a fad. Yeah, okay. Same way they said about cars and electricity. It's a fad. It's a fad because people don't want to believe. You have the mindset of, when I see it, I will believe it. But by the time you see it and believe it, it's done, and you missed that train. People were saying this with Bitcoin when it was at $10, $20, $100, $200, $500. Well, you know what? I don't know. And then all of a sudden, 1,000, 2,000, 5,000, 10,000, 20,000, 50,000, 60,000, 70,000, all the way to 100,000. And then, oh, well, maybe I'll do it now. It's the same thing when you have a company and you're building it up. You want to build up your core business. And if you have a great business, Even then, a digital asset treasury is a good path to go. It doesn't mean that you're going out there and you're saying, I'm going to go and raise this capital solely to go do this. That's not the case, because if you're going to do that, then you become a digital asset treasury company, and then that is your core business. Okay, and I'm not a fan of that. With some groups, they have it on point and they know what they're doing, and that's great for them. For companies that don't, that really think that they know, and they think, well, I'm going to go do this, and I'm going to get a trader that's going to go trade it and do this, and then you're going to basically, for all intents and purposes, you're going to get your butt handed to you on a silver platter. And why? Because you're doing things the absolute wrong way. You can monetize a digital asset treasury the right way. The same way if you have gold in a vault, or if you have something that's of value in real estate. You wouldn't go trade real estate, right? Same way you wouldn't go. I mean, with gold, you can actually trade. You can issue contracts and everything. But at the end of the day, these are liquid assets as well. They accrue in value. You have the ability to monetize it and gain yield and the like. But the reality is, for gold, storing it probably cost you half a percent to 1% of what you have in your gold treasury, right? That's what it's going to cost you to insure it and everything else. Okay, now what happens when you go to sell it? You think you're going to go to the corner grocery, you're going to be able to go sell your gold? No. You have to go through, you can go through, if you have Hallmark bullion, you can go through the exchange and get it done. But if you don't, oh my. Okay, verification, smelting, everything else, and that's going to cost you again. And this is why having a digital asset treasury is fluid. Okay, you don't have the storage cost, you don't have this, you don't have that, and so many different products can be built on this, and with a digital asset treasury, and that it can be leveraged. And these are things that we're doing, creating these products that are leveraging a digital asset treasury. Okay, creating viable products, where a company can go raise capital, they can go and they can monetize their physical commodities to go and create a treasury. So many different things that can happen there. You have companies that are centralized that become your quote unquote custodian. Okay, you know what I like? I like having self custody, but with verifiability, because if you can verify it, see it on chain, see it out there, you can see what the treasury, what's in the treasury, what it's locked up for. If a note is written on it, okay, basically you get to see what that's for, and for an investor, like we have perpetual digital credit note tokens, PDCNs. I want you to remember that, PDCNs, because that is going to be a big proponent in the world of finance, I believe. All right, and basically, you have a digital asset treasury. You are guaranteeing that note, that PDCN, with that digital asset treasury. Now, if you have it and it's publicly, you can see it. If the public can see it, an investor can see it, the regulator can see it, anyone can see it. Now you have something that becomes a little clearer, right? Now you get a little more comfort as an investor. You say, okay, I see it. They have this, all this stuff's in place. So at least you're going in with your eyes wide open. You understand what's happening. Okay, it's not some opaque situation where, okay, yeah, I have a penny stock and go buy the stock, all right, or go do something like that. And you have that all the time. You have publicly traded companies that are trading on the OTC markets. The reality is, you have some good companies that have the ability to go higher, but then you go and uplist to the NASDAQ Capital or higher, depending on what they're doing. But you have some companies, they just can't cut it because they don't have their things in order. And it may not be because this is what they want. They may be limited with their choices, with raising capital and doing all that other stuff and attracting investor interest. If you have a viable core business, a digital asset treasury will help you to go and attract investors and strengthen your balance sheet, create yield bearing situations, having the ability to issue a debt instrument to go raise additional capital, having the ability to go make acquisitions using a similar format. I mean, it goes on and on and on. We've been basically, pounding on this for the better part of a couple of years, and the reality is that as far as financial instruments go, you're only limited by your imagination and what you can put together. All right, and the reality is you will have more and more companies kind of adopting this type of methodology, public companies, because it makes sense. It makes sense, and again, there are companies that really don't get it. They don't get it, and those are the ones that are going to wind up, missing the boat, and it's a shame. It's a shame, and really, and unless they understand it, then it's hard for them to do a thing. But what I realize as well, and I find that when you're dealing with in the micro cap space, you have a lot of these companies. They've been through the ringer. They've been taken advantage of. They've been, dealt a bad hand. They've seen their stock go from 5 to 2 cents. And that type of thing, and they have their company, they love their company, but they can't get out of their own way, and this is what winds up happening. So if a digital asset treasury solves some of these problems and gives the company a fighting chance, isn't it worth doing? I think that you have sometimes egos get in the way. Right? You think that you have the best thing since sliced bread until somebody else, has the best thing since sliced bread. You start getting, spaces that are crowded and so on and so forth. At the end of the day, you need to be able to compete. You need to be able to compete, because if you can't get that flexibility in what you're doing, okay, if you can't get the interest from investors on a global scale, if you can't go and create a financial model that shows a dual growth mechanism where both of these growth mechanisms can have various revenue streams coming in, if you're not doing that in this day and age, you have a problem. And I think that, again, there are a lot of smaller publicly traded companies that are in this position. The smart ones, well, they're making alignments with people that can help them with digital asset treasuries. The ones that really don't understand it or choose not to understand it and think that it's some I don't know, some magic trick or something that's not going to last, wake up, because this is here to stay. This is here to stay, and it would be a shame to see good companies, for them to sit on the sideline and see something that's in front of them, and because they don't understand it, they don't take the time to understand it. And by not taking the time to understand it, they lose an opportunity. Okay, and the opportunity loss can be very costly. So at the end of the day, it comes down to the value add that comes along. Okay, because if you create a foundation where you're utilizing a digital asset treasury to create this foundation, you can go do that, let that build up, let that do its thing. You have value on the books. Now you build up your company. You generate additional value. You create jobs. You do things the right way. It'll reflect in the stock price at some point. Because at the end of the day, if you have a company that look, the market cap of a microcap company, honestly, it's it's not even real, right? Because you can have a company that is negative, okay, negative, 10, 20, 30 cents a share, okay, trading at $2, and meanwhile you look at their market cap, it's a billion. How is that even possible? Half a billion, 100 billion, 100 million, 50 million. I mean, if your company is, I mean, it's not real. You have to kind of look at, and people should be more realistic, and look at the companies for what the breakup value is with a company. Do the math. Because if you can't do the breakup value of a company and just look at what they have, even if it's IT or IP or whatever they have there that's of value, then how do you quantify it? When you have companies, they may have patents, right? Now, those patents, the value of those patents is all relative too. You can have patents that you think, as a company, you think this is worth $1 billion, but in reality, who's it worth $1 billion to? To one company that doesn't want it? Then what's the value of it? Okay, so all this stuff needs to be taken into account. And as I said, when you're trying to build up your company, a publicly traded company, in this day and age, a digital asset treasury is a no-brainer. No-brainer. It's not that you're turning your company into a digital asset treasury company. It's that you are embracing the future, because once you have that digital asset treasury, tokenization is in your hands. That is your next move. These are the things that you can do. There's so many things that can transpire, and I just wish that more companies understood this, because it would make things easier for them, and I wouldn't have to do a show like this and going over it constantly. Okay, an episode like this, not the whole show. I'm doing episodes on digital assets and digital asset treasuries. Look, at the end of the day, you, as a CEO of a company, you have a fiduciary responsibility to your investors, to your shareholders. And if you're not exploring every opportunity to grow your company, then you're not doing your job. Sorry. And if you are looking down on opportunities that may be there, then again, you're not doing your job. And maybe somebody else should do your job for you. And they may sound brutal, but it's true. Your job is to create value and explore every opportunity to do so. And by not at least exploring it and having an understanding and making an informed decision, right? I've dealt with this myself, where you have a CEO, CFO, or COO, or someone that runs a company, and then all of a sudden you're going through everything with them. And I'm sure the attorneys that are hearing this and the investment bankers that are hearing this deal with it too. Okay, you're explaining it to them, and they're looking at you like a deer in headlights because they don't get it. And because they don't get it, they're afraid of, oh my God, I don't understand it, so I don't want to seem stupid, so I'm not going to do it because it's not good for me. Well, you know what? It's better to be informed than say, you know what? I don't understand it. Please, help me with this. Or maybe you do some due diligence and don't be lazy. And maybe do some due diligence and do that. And that's the truth. And it would behoove such companies. And again, I'm talking. You can have New York Stock Exchange listed companies that can benefit. NASDAQ Capital and higher, that definitely will benefit. But I'm talking about right now with the smaller microcap companies that are viable, that are trying to do something genuine and build. Those companies that look down on even thinking about a digital asset treasury because they don't understand it, then it has to be the wrong thing to do, right? Is it the wrong thing to do if you're actually going and bringing value to your company and you're able to go and bring yourself to the point of raising capital to go uplist and really make a run of your core business? Got to think about it. My advice to those CEOs and those CFOs and those COOs that look down on the digital asset space, the blockchain space, the tokenization space, okay, and what is happening with digital asset treasuries, my advice to you, take the time, do your homework, understand it before you make a decision, so you're making an informed decision and not a hurried one because you don't understand it. And I guess that comes from fear, right? You fear what you don't know. Well, I come from a school of you embrace it and you learn it and you make it benefit you. You do that, then you're in the win column. Okay, anyway, I want to thank you guys for tuning into the show. Hope I didn't bore you too much. We'll be back with you with another episode of Money Never Sleeps, and I think next time I'm going to speak about some companies that are actually, public companies that are embracing digital asset treasuries, and we're going to see, how they're doing, and see how this works as far as a DAT company goes, as opposed to having a hybrid situation. Okay, anyway, you guys, I want you to have a great rest of the trading day, and we'll be back with you with another episode of Money Never Sleeps.
Initiating shutdown sequence.
You're listening to UCW Radio. In your face.
What is your major malfunction?
So let it be written. So let it be done.
Ladies and gentlemen, my mother thanks you, my father thanks you, my sister thanks you, and I thank you.
The views and opinions expressed on Money Never Sleeps Radio are for informational purposes only and should not be construed as financial advice. The host Louis Velazquez and guests of Money Never Sleeps Radio are not licensed financial advisors, and any investment decisions made based on information presented in this podcast are at the listener's own risk. Listeners are encouraged to consult with a qualified financial advisor or investment professional before making any investment decisions. The podcast hosts and guests do not endorse or recommend any specific investment strategies or products. All investments involve risk, and past performance is not indicative of future results.